In this video, we're going to have a look at Waste Management, which is the waste management behemoth of the United States. They also named their company after the industry they're in, which makes it a bit confusing sometimes to look for competitors. But of course, Waste Management is the biggest one in the United States, number 2 being Republic Services that we looked at a few months prior. So I think when we start looking at their financials, the first thing we see is consistency. And that is very much the thing that investors of Waste Management are interested in. Their revenue has been steadily growing from 14 billion in 2013 to almost 20 billion here in 2022. Overall, 3.5% every single year. Their EBITDA has been growing from 3 billion to 5.5 billion, growing by 6% as opposed to the 3.5% in revenue, which does mean that their margins are increasing, which does mean that they are becoming more efficient in operating their business, which is very much what we like to see. Their debt level has also been steadily growing, but nowhere near as much as their EBITDA. Although, in all fairness, I do think they are as leveraged as they can be, so I do not expect their debt to grow faster than EBITDA because they simply can't afford it. Their debt has been growing from 12.5 billion all the way to 19 billion here in the time span of 10 years. They never really have much excess cash on hand. Here in 2013 we see 235 billion and in 2022 we see 351. They never really have any excess cash on hand, which is a bit scary for me as an investor because it does mean they don't have any capital to cushion any potential blow. Looking at market cap, we see a beautiful picture where we see that the price on the stock market itself has been increasing by 12% every single year, and this does not include dividends. So this is very attractive for any investor to look at, and certainly a big kudos to Waste Management for rewarding their shareholders. Enterprise value is the entire value of the business. So we take the market cap to which we then add the debt and we subtract the cash. Now, because their debt has been growing a lot faster than their cash has, of course this is taken into consideration when looking at the entire value of the business in the way that a potential competitor might want to buy Waste Management. They of course have to buy the shares from the open market, but they also have to incur the debt that Waste Management has. Their enterprise value has been increasing by about 10% every single year. So now we get to the EV/EBITDA ratio, the multiple with which Waste Management is being valued. And we see here overall double-digit multiples. And this is of course because Waste Management is a very secure business. People will always have trash and we always need people to clean up that trash. So Waste Management is not going anywhere in the foreseeable future. And of course because of that it trades with a premium. Add to this that they do actually increase their revenue and they do increase their earnings, and they also reward shareholders with share buybacks. So of course this does make it a very attractive company for any long-term safe investors out there. We see an EV/EBITDA ratio at the low point of 9 times here in 2014 and 17 times here in 2021, which was of course the COVID pandemic high with a lot of monetary influx from the government. So I do expect this number to come down, but we do see that overall their EV/EBITDA ratio has been shifted from around 10 to around 13-14. Now looking at their net debt to EBITDA level, like I mentioned, they are as leveraged as they can be. They are at the 3 times ratio, which is the ratio that we use to value any business to see whether or not they are over leveraged. It's also the measurement that many financial and investment banks will use when they look at a company like Waste Management, because after a 3 times net debt to EBITDA leverage, it becomes a bit more risky to loan to a company like Waste Management, which already has quite a lot of debt on their balance sheet. Now, of course, because of the consistent cash flow, I think Waste Management is nowhere near as risky as, let's say, a tech startup. But still, I think it's important to note that they do not use their free cash flow to buy back debt. They are as leveraged as they can be for the past 10 years. So this then brings me to cash flow. Looking at the cash flow from operations, we see that they have been increasing their cash flow from 2.3 billion to 4.5 billion. Now, cash flow from operations is all the money that comes in simply from operating their business, simply from running their landfill, running their garbage trucks, basically the entire business. How much money is left on the balance sheet at the end of the year of operating this business? We see here in 2022 they had 4.5 billion, which is an increase of 7% every single year. Very nice. Capital expenditure are all the expenses that have to be made in order to future-proof your business. It's the additional purchasing of additional garbage truck, maintenance of garbage trucks, additional waste management location, additional permit papers, everything they need to keep on running their business into the future. And we can see that their capital expenditure has been growing in line with their cash flow from operations, which is absolutely not a problem at all. And I think actually when it comes to a waste management business, I don't mind seeing some higher capital expenditure numbers, because that way I know that they are doing the best they can to actually make sure they are running a steady and proper business and not cutting too many corners. Because I think waste management does have a history of cutting corners, at least in the accountancy department. Maybe not so much the operational part, but the accountancy department. They are one of the biggest fraud cases, historic fraud cases when it comes to accountancy. But I will not get into that in this video, but you may want to do a deep dive into their history to figure out exactly what was going on during those times. Free cash flow has been growing in line with their cash flow from operations and capital expenditure, which is very much what we expect, from 1 billion all the way to 2 billion here in 2022. And this is the point where we see that they have been rewarding shareholders quite heavily during the past 10 years. Every single year they have been buying back shares. About 1% every single year of shares have been removed from circulation, basically ripped up by waste management in order to increase the free cash flow per share, in order to increase the earnings per share, in order to increase the shareholder value. So I think this part of waste management makes it very attractive for shareholders like Bill Gates, whom I know has a very big stake into waste management because of this particular piece of the puzzle, the shares outstanding that they have been decreasing every single year. So of course this then brings me to free cash flow per share, which is basically where we take the free cash flow and we divide it by the amount of shares outstanding. Now because their free cash flow has been increasing and the amount of shares have been decreasing, of course we see a higher percentage growth here when it comes to free cash flow per share. $2.18 here in 2013, $4.70 here in 2022, which is quite a nice return for a waste management company. Because of course it's not a tech company, we don't expect them to grow by double digits every single year. It's waste management, it will grow steadily but surely, and this is very much what we have been seeing here with waste management. The price per share as seen on the stock market has been increasing all the way from $44 to $157 here in 2022. This is where we see the return in market cap as well. Absolutely amazing for anyone holding waste management here in the early 2010s. They have had a pretty amazing run for the past 10 years. The free cash flow yield that the market puts on waste management is circling around the 4 to 5%. Even the past 3 years it's been around 3%, but I think this is a bit overvalued and a bit too optimistic, high of a multiple or low of a yield for a company like Waste Management. Of course they do require a premium, but I think a premium of a 3% free cash flow yield is a bit much, but we'll get to that in a little bit. So now let's see if we can forecast the business of waste management into the future. So let's see what happens if we buy the stock right now and hold it for a decade. Does it outperform the market? And in order to make a model like this, I want to have relatively conservative estimates. So I'm going to use conservative numbers for my future growth to really cushion any additional blows that the company might get in the future. So we see here for the past 10 years, their EBITDA has been growing by about 6% every single year. So I'm going to reduce this to 5% for the next 5 years, and then I'm going to decrease it to 4% for the few years after that. Of course, Waste Management is the biggest waste management company in the United States, but there are a few other companies like Republic Services or Waste Connections that do have a share of the business, and therefore I think their growth may be a little bit limited. So I'm going to give them 5% for the first 5 years and 4% for the last 5 years. I'm going to attach a multiple of 14 times. Now historically they've been at around 13 times, but I think the earlier 10 to 9 times multiples were a bit undervalued and a bit underpriced compared to what we've seen lately, because they have been able to steadily grow their profits, grow their EBITDA, grow their revenue, and I think the consistency with which they've been able to do that requires a higher premium. So I think 17 is too much, but I certainly think around the 13 to 14 times range is where I expect them to be in the future. So taking this multiple, it gives me an enterprise value of about 120 billion here in 2032. to which we subtract the debt, we add the cash, gives me a market cap of just over 100 billion, divide by the amount of shares outstanding, and I'm assuming here that the amount of shares outstanding remain the same. They probably will decrease just like they have been doing for the past 10 years, but for a conservative estimate, I'm going to remain them the same. Of course, if I do expect them to buy back some shares, so for the last 10 years, they've been reducing their share count by about 55 million shares. Maybe in the next 10 years, I expect them to reduce that by, let's say, 40 billion. Then I get a share price of 263. But I'm going to remain it stable there because I will include the free cash flow in our next model. So I will leave the shares outstanding at 415 million, giving me a share price 10 years from now of $244. So now we're going to do the same thing but for the free cash flow model. So we're going to take the free cash flow per share and grow this into the future. Now historically they've been growing their free cash flow per share at 8% year over year because their free cash flow has been increasing and their shares outstanding have been decreasing. So I'm going to be a little bit more conservative here and say I'm going to expect 7% for the next 5 years and 6% for the 5 years after that. I'm going to attach a 4% yield to this. So historically they've been at 4.2. I think 3.5 is certainly too low. I think 5 is certainly too high. So I'm going to sit in the middle of that. I'm going to say 4%, which is the same yield that I have given Republic Services in a previous analysis. So this gives me a stock price 10 years from now for Waste Management of $220. So if I look at the stock market right now, I can buy as many shares of Waste Management as I want for $155. Now, taking both our models, the enterprise value model as well as the free cash flow model, I get a share price 10 years from now of $232.21. Simply looking at the price on the stock market itself, I expect this to give me a compounding annual growth rate of 4.1%. But of course, Waste Management has been producing a lot of free cash flow. And what can you do with this free cash flow? You can of course buy back debt, you can pay a dividend, you can buy back shares, or you can expand your operations. Now they have been doing every one of these except really for buying back debt, because we can see that for the past 10 years they've been as leveraged as they can be. But other than that, they do pay a dividend, they do buy back shares, and they also acquire additional businesses. So if we include that free cash flow, I expect an IRR, an internal rate of return of 8.8% for Waste Management in the next 10 years. I always say on average the stock market returns about 10%, and I think when it comes to that I expect Waste Management to underperform the market. I think Waste Management is too highly valued at this moment, and I would definitely wait for Waste Management to come down in price before I start considering picking any of these shares up. I think especially right now where there is a bit of market turmoil, a bit of possible headwinds, a bit of economic recession talks, I think people are flocking to safe stocks like Waste Management, which has really increased their value for the past few years. So right now I would not be interested, but let's see what happens if the price goes up or comes down. So if the price goes down here to about $140, I expect an IRR of 10%, at which point I would be more interested in buying Waste Management. If it comes down even further to 125, I think at that point I would certainly consider buying Waste Management, because of course the IRR is only 12%, but it's a very, very secure 12%, because Waste Management is not going anywhere, and I can feel comfortable in the next few decades maybe knowing that this stock of Waste Management would keep on returning on my investment. So overall, I think comparing Waste Management to its counterpart of Republic Services, I think Republic Services is the more attractive buy right now if you're looking into waste management companies. This was my look at Waste Management. Thank you very much for watching. Don't forget to like, subscribe and all that good stuff, and I'll see you in the next one. Cheerio!